If you're worried about your favorite tech stocks, don't worry. We're going to cover them, and I'm going to give you a professional investor's opinion on each one of these. We're talking SoFi, Palantir, Google, Oracle, all kinds of stocks, so strap in. First up on the board is the S&P 500. This is the market. This is where you need to start all of your analysis. So 40% of the market, or 40% of any stocks move, is due to the market. So we have the trend, signal, and breadth all working in our favor here. The bullish trend, a buy signal, and bullish breadth that we can see right here, meaning more buy signals than sell signals. So that's a great start for the market. Now let's go into the individual stocks. So let's look at SoFi first. I know people love SoFi, but you may not want to love SoFi. SoFi bros are super, super enthusiastic about this stock, but right now it is in a bearish trend. Your 10 EMA is under the 20 EMA, price is under the 50 EMA. Just over here, we had a bearish trend that bounced right back up, but this is getting worse and worse and worse. This reminds me of the market cycle. The market cycle has a stage 1 consolidation phase, stage 2 huge run up, stage 3 sideways moving average crossing phase, and stage 4 is the down phase. So don't believe me? This is what happened in Tesla earlier this year. The stage 1, the stage 2, the stage 3, the stage 4. It can happen to any stock, including SoFi, when it fell down by 50% earlier in 2025. So SoFi doesn't look super great off the top right here. And if we look deeper into SoFi, we can see it's in a sell signal state. It's getting more fearful as the sector is getting more greedy. So that divergence right there is not a good place to be. You want to be in a greedy market, in the greediest sector with the greediest stock. That is when things are running rampant. And that's how Outlier works. We show you the greediest stock in the greediest sector when the market is greedy, and then you can trend trade that and make masters of the universe money is what we like to say. So SoFi is one that I'd be staying away from. What about its competitor, Robinhood? Robinhood also, 10 is now under the 20, price is under the 50. This is starting a bearish trend. It's down 3% or so on Friday. And Outlier had the sell signal on Friday. So actually, had you got out of it the day before, or Friday morning, I should say, you would have saved yourself a couple bucks. And right now, this stock is also not looking good because it's getting more fearful while the whole sector is getting more greedy. So let's keep going to AMD. AMD looking not so good. AMD, the advanced money destroyer, is coming back to town, because we have our 10 under the 20, price under the 50. And I know I'm going to be a broken record here, but AMD is getting less greedy, more fearful, while the sector is getting more greedy, less fearful, and the sector has bullish breadth. So 70% with the market and the sector combined is working for you, but AMD is struggling. AMD is struggling like crazy. Now, it doesn't have any outlier blocks for a little bit of room up here, so no overhead resistance for a while. So that gives it a score of 6 out of 9 of our key points that we look at. How about Palantir? Palantir's got to be great, right? So let's take a look at this one, right? Still in the tech sector. So the sector is going to help you out here. The stock is in a bullish trend. Let's double check after Friday. Who knows what's happening? Yeah, still in a bullish trend. And the signal is sitting on a buy signal. The fear and greed, though, is getting weaker. So it's getting more fearful. And then it does have a little bit of room up to this order block. If I were looking to buy Palantir, I would wait until it's over $200. Now, I know you're probably saying, but if I have to spend $200, then I've overpaid for the stock. Here's the deal. You want to be buying stocks as they're crashing up, not as they're crashing down. But no, Chris, no. A professional fund manager like you would know better. A professional fund manager like you who's had a compound annual growth rate of about 40% over the last 5 years should know better. There's no possible way to buy stocks as they're going up and then make money. That's how the market works, right? You can buy it as it's crashing down, but you don't know how long you have to wait for it to come back up, okay? So as Palantir crashed down over here, it did make a nice, beautiful recovery and went crazy higher. And if you bought it as it's going up, you're at a profitability that much faster, right? Now, Palantir has had these really steep, nasty pullbacks. But I want to go back to AMD for a moment here. When we look at the AMD chart from late last year, early this year, you can see what I mean. If you're buying it on the way down, you don't know how much further it has to go. So let's say you bought it at 150 on this step, 150, 40, 30, 20, 10, 100, 90, 80. And AMD dipped into the 70s before it finally bottomed. So if you bought it around 150, it went down 50%. While you thought you were buying the dip, what you were actually buying was a big headache. Whereas what we talk about the 10 going over the 20, price going over the 50. If you had bought it here, you would be up 50% by the time that this person is just to break even. I'm giving you such valuable trading advice right here, 100% for free. This is what we do on our channel, so make sure you subscribe. So Palantir right now looks really good. If it can break through that overhead resistance right here, I think it definitely has some room to run and certainly is looking a lot better than some of its competitors. Let's keep going. Google, this is not in the tech sector. This is in the communications sector, but this sector is looking great as well. And Google is now sitting on a buy signal. Google, Alphabet. It's Google, right? We all know that they changed their name to Alphabet. It's like Meta and Facebook. We all know it's still Facebook. We all know it's still Google. The breadth looks great. The fear and greed in the sector is looking great, but you'll notice up here, the greed on Google has been just out of control. So let's go look at Google real quick. I mean, with that sell signal coming in here, we're basically trying to get you out right at the top on December. What day was that? December 10th? Yeah, December 10th, which is right here. We're trying to help you out and let you know that right now is not the time to be loading up on Google. It's the time to be taking profits. The time to be taking profits. Let's go to the next stock. How about Nvidia? Back to the tech sector. This one is not looking so great. Now, you're probably asking yourself, what are these backgrounds over here? These backgrounds are showing you when it's in a bullish trend, makes it super easy, or in a bearish trend, also makes it super easy. Now, you can get access to this platform. This is outlier.com. It's 82 cents a day. It's unbelievable value for what it gives you. And let's go over to Nvidia here, and we can see the Nvidia sell signal came back on November 12th, which I already have marked. From November 12th to now, how much would you have saved had you bought Outlier for 82 cents a day? You would have saved 10% on your Nvidia holdings and got out of the way. But Chris, I don't want to sell because I don't want to pay taxes. Would you rather pay taxes on your gains or watch 50%, 40%, 30% of your investment evaporate? I don't know. Seems pretty obvious to me. Let's go to the next one. How about Tesla? Tesla is not in the tech sector. It's in the discretionary sector, but Tesla has a buy signal. So on Tesla, let's go look at it. Ooh, Tesla actually looks really sharp. This is what I'm talking about. Buy stocks as they're crashing up. It overwhelmed the selling pressure right here, and Tesla is close to new all-time highs. New all-time highs are bullish AF. That was something that took me a long time in my 16 years of trading to get over. When you see something at new all-time highs, that is super, super bullish. Let me give you an example, right? Anytime a stock pushes to new highs and it's setting new highs, right? Anybody who's bought it ever before that is super stoked, right? Let's look at Nvidia. Anybody who's ever bought it before as it's going up is super stoked because if they're still holding on to it, they're making money. Okay. So Tesla setting new potentially all-time highs, 52-week highs, coming back to this area right here. Let's see if it can push through. But right now, it's definitely pushed through this area of overhead selling pressure. And it might just light up. Let's go to Facebook. We talked about that earlier. Meta, also not looking so hot in this sector. Let's go look at Meta real quick. Ooh, Meta with this big, ugly, nasty candle right here. But it's in a little bit of sideways trend. Your 10 is over the 20. Price is under the 50 still. So I'm not excited about Meta at this point here. How about Oracle? Oracle and Broadcom are two that I wanted to talk about real quick. In fact, let me get this to Broadcom. AVGO. Okay. Oracle and Broadcom are two that I want to talk about real quick. So Oracle had this sell signal back all the way in October, ORCL, and has been trending down ever since that point. Okay. Sell signal came here, and had you follow that sell signal in Oracle, it would have saved you 35%. It would have saved you 35% of your investment to get out versus letting it go down. That's what I mean by it. Don't give me an excuse about taxes when 35% of your money just evaporated. I think it's pretty great to pay taxes when you don't have to watch it evaporate. But we've had this sell signal the whole way. So you don't have to hold a stock as it's going down. But Chris, I'm a long-term shareholder. That's fine. Be a long-term shareholder when the price is going up. And then when it stops going up and starts going down, get out of the way and repeat over and over and over. What about AVGO? What about Broadcom? Here's the thing. This was a 9 of 9 on Outlier. Broadcom, AVGO, was a 9 of 9, but today down 12%. This is why one of my cardinal rules of trading is never trade into earnings. Because not only did Oracle get hit by 11% on earnings, Broadcom got hit by 12% on earnings. Okay. Earnings are super fun, super exciting, but they're also gambling. They're taking additional risk that you don't need to take. And so even when a stock is set up 9 of 9, there is no possible way that I'm trading anything running up into earnings because the risk is elevated. And I don't want risk. I want to reduce risk as much as possible. And I want you to subscribe so you don't miss these updates. We go live twice a day, every day. And my goal around here is to help you save time, make money, and start winning with less risk. And you can do that by clicking one of these 2 videos. We will definitely talk soon.